You have to have very clear guidelines or rules for entering a trade. Hey gang, Steven Sitkowski here, and I want to talk to you about rules-based trading as it relates to technical analysis. So anytime we're talking about technical analysis, of course, we are referring to a chart. So to do this, let me pull a chart up for you. Kind of go through this together. And let's use Microsoft. So I'm in a trade right now in Microsoft, and I'm going to use the 6-month chart. So the way I've got this set up right now, you can see here that we have a moving average, that is the 30-day. We have the volume, MACD is in the middle, that is known as a histogram. So when the histogram is green like that, it is bullish. When the histogram is red, it is bearish. The greater the divergence, or the bigger the difference between the top and bottom, the more powerful that trend happens to be. Below it, we have the relative strength index, letting me know if the strength of the trend is improving or weakening, and then finally on balance volume. So it seems to me, for most people, that finding the proper entry is fairly simple. Okay, so let's say your trading rules are, well, I want, if I'm going to take a bullish trade, I want to see the stock trading above the 30-day moving average, preferably on really good volume. I want a green MACD, RSI moving up, and OBV going up. Okay, so all those things come together. Boom, and Microsoft closed that day at $165 a share. Now it's at $196, so it's made a really good move. Here's where people get into trouble and aren't sure what to do. They're in this bullish trade, in this case on Microsoft, and they don't know when to get out. They're not sure when their outlook has changed. And let me just share with you the two things that I see a lot of people do. I'm going to add another moving average to this screen, to the chart. Simple moving average. I'm going to throw a 10-day up here. And we'll do an easy color like white and save that. Okay. So a little variation on just the 30-day is if we combine the 10 and the 30, we simply say, hey, look, when the 10-day moving average crosses above the 30, we are bullish, and we continue to be bullish until such time as the 10 crosses back below the 30. That's one way to do it. Now, if that feels a little too complicated, another approach would be, all right, I'm going to stay in this trade until the stock closes below the 30. That's my confirmation that we are no longer bullish. I'll get out at that point. You can see we came close right through here, didn't we? And that 30-day acted as a line of support. Here is another way to go, and that is to look at the MACD. Now, if you get out when the MACD turns red, notice you'd have gotten out here and the stock actually went higher. So it would be a quicker exit. So in a market that is more trending, staying above that 30 would be your best bet. If you want to get out before things get ugly, then you can get out when the MACD turns. But here's what is really, really critical. And we'll look at another stock. And that is that you follow the rules, that you're not looking at your chart going, gee, I wonder what I should do. You should be able to look at this chart and know exactly what you intend on doing. Let me give you another example. This is Redfin. I have a trade on Redfin right now. So let's say we wanted to bring that 10-day moving average back in. Okay, see how that would have worked out. Done. All right, so it crossed above, the 10 crossed above the 30 right here. Redfin was at $16. Now it's at 38, right? And the 10 has continued to stay above the 30. Now notice right here, the MACD turned red for just a slight period of time with that little bit of a dip, but would you have really wanted to have exited the trade? So what seems to me, and let's look at the general stock market. This is the S&P 500. Notice what is happening. It looks like, yep, right there, we see that the 10 is crossing below the 30, meaning that the S&P, now it's just barely, is no longer bullish. We could confirm that the MACD is red. We see the RSI going down. On balance, volume is weakening, but just a little tiny bit, not all that much. So it's not a super scary position at this point, but it is certainly worth keeping an eye on, for sure. Here, there's a little better view. So it hasn't quite crossed over yet, has it? Nope, hasn't quite crossed over yet. So we'd still be saying, okay, barely bullish, but we do see that it crossed below the 30. So if I ran an SPY trade, I would no longer stay in a bullish trade. Does that make sense? As compared to Redfin, right? See the difference between those two? Much different view, okay? It's above both the 10 and the 30. So let's make sure you understand my point. You have to have very clear guidelines or rules for entering a trade. Most people are good at that. You know, when it's above the 30-day or the 10 crosses above the 30 and the MACD is green and the RSI is moving up and the OBV is moving up, then I get into a bullish trade. But they have a really hard time knowing when to get out. And also, when they get a really volatile day, they freak out. Well, don't freak out. Look at your chart. Your chart will tell you if it is time for you to make an adjustment. Well, I hope you found that helpful and instructive. If you want to learn how to trade like the pros, Market Mastery Group, that's what we are all about. We have a team of people really committed to helping folks be able to profit regardless of whether the market goes up, down, or sideways. And I would recommend, why don't you check out one of our free webinars and see if this might be for you. If that's of interest, click on the link, give us a little bit of intel. We'll send you out an invitation and send you out a reminder. Awesome. Thanks for watching. Till next time, God bless. Stay safe. Be prosperous. Bye for now.